Welcome back to the farm. We don't have activist investors in this country yet, but in recent months, a new breed of activist analysts have sprung up. To illustrate, let me use 3 recent research reports that caused much anguish to the companies they covered. Macquarie accused HDFC of adopting aggressive accounting practices by passing provisioning through reserves and also adjusting for zero-coupon bonds through reserves instead of the P&L account, due to which it said HDFC's earnings have been overstated by 38% in FY11 and 24% in FY12. In other words, earnings growth has been managed. HDFC responded strongly, saying its accounts are as per Indian GAAP and consistent with its long-term policy. HDFC also questioned the timing of the Macquarie report, pointing to a May 7th report by the same firm that rated HDFC as outperform based on the same facts and figures. Espirito Santo counted a third instance of aggressive accounting at Biocon. Biocon deferred revenue from a deal termination that Espirito thought should have been recognized as a one-off revenue item in that period itself. And though the report admits that accounting standards do give flexibility in recognizing such deferred revenue, it also criticizes the company for aggressive accounting that will lead to consistent over-reporting of EPS to the tune of 20% every year between FY13 to 15. Biocon responded, saying the accounting method followed is in compliance with GAAP and appropriate disclosures have been provided. Auditors have drawn reference to this method of treatment as matter of emphasis. And finally, just this week, a Credit Suisse report said JSW Steel had understated its debt by 119 billion rupees. Credit Suisse then revised its comment to say the debt is effectively higher. JSW maintains its financial statements are in accordance with Indian GAAP and consistent with the practices being followed by the company for years. Now, all this brouhaha over accounting practices leads me to ask this week, are companies too aggressive in their accounting, or analysts too activist? And what numbers should investors believe? Well, to answer that, I have with me veteran auditor P.R. Ramesh, chairman of Deloitte India, Sai Venkateswaran, partner and IFRS practice leader at Grant Thornton, and Chirag Talati, analyst at Espirito Santo and the author of that Biocon report. Gentlemen, to all 3 of you, a warm welcome. Ramesh, my first question goes to you. Before that, a caveat. I know that your firm is involved in both the HDFC audit as well as some audit aspects of JSW. So there's some degree of conflict there. So I appreciate you may not comment directly on some of those issues. But broadly speaking, based on what I have stated, what is this? A case of aggressive accounting by India Inc. or a new breed of activist analysts, that are finding things to pick at?
Well, I think I would agree with you in the second part of it. Perhaps we're seeing an emerging breed of activist analysts.
Are you saying that in a complementary fashion, or are you saying that they may be taking it a bit too far?
Again, complementary or what is not complementary depends on how it impacts me finally.
You or the company?
No, as a professional.
Okay.
Right? So,
but as a senior auditor, you would be delighted that if something within audit practices is creating concern within the analyst community, they are at least today finding the voice to flag it.
True, whilst I would always encourage a different point of view.
Right.
But what's important is to distinguish between what is fact and what is opinion. I would always prefer an analyst states the facts only, because opinions would depend upon having full information. And particularly in accounting, when you have 2 accounting choices, let's say you have 2 or more. Now the fact that one chose a method over the other is a matter of fact. So when an analyst present, he could say that, look, if this accounting were done, this would be the picture. If this accounting were done, this would be the picture. It's not appropriate for an analyst to say this is conservative, this is aggressive, because today we are not in a world of conservatism. We are in a world of fairness. Because if I'm a shareholder today and if the accounting is conservative, why should I be impacted? And somebody later benefit.
Okay, so Sai, would you agree with that view? And when you answer that question, please also remember that in all 3 reports that I have cited, the analysts have said that these companies are following accounting practices, but yet they've termed the accounting practice aggressive. So for instance, let's take the Macquarie case. They've said that, what HDFC is doing is not outside the accounting standard, but then they've cited the comparison with LIC Housing Finance, saying it passes its provisioning through the P&L and not, setting it off against reserves, and thereby creating some peer group pressure. What do you make of this?
So I think if you look at Indian GAAP, I think the way Indian GAAP today exists, it does give multiple alternatives in certain circumstances, in certain areas. I think there is ambiguity in terms of what the guidance is, or there is a lack of guidance. So let's say if you just take the example of say one of the instances that has been quoted in the Macquarie report relating to the utilization of the securities premium account. Now it's an accepted Indian practice and something that's enshrined in the Companies Act in terms of what you can use that securities premium account for. So redemption, the premium on redemption of securities can definitely be
so you're saying this option is available to the company, the company has used it, and therefore there is nothing wrong with it?
So technically there is nothing wrong. So I think... But
you're using the word technically. Yes. There is a caveat.
So there are multiple choices available. So another company could very well choose to go down a path of, I think, expensing all of that.
So as an auditor, when you audit a company, leave aside HDFC, what did you tell the company, when you look at the company's financials, what do you check them for? Whether they've technically abided with the accounting standards?